Hello, MH trader. Welcome to the final part of the candlestick pattern. So, we've looked into somewhat theoretical part of the candlestick pattern. So, yeah, like I said, we are now on the live chart. So, after doing the a form of practical, a form of theory. So, this is like the practical class. Now looking at this pair now, this is British pound and the US dollar. That's GBP USD. If you look at this, I want to mark this zone. Like I noted in the previous lecture, that we only look at candlestick patterns at important zones, which are zones of resistance and zones of support. So we have this resistance zone. Let's say before we got here, we had this zone marked. So I extended this zone now. I'm waiting for the market to come back. We had this first touch, this second touch. So I'm expecting the market to come back into here and give me a signal to sell again. Then if you look into here, the market was coming, and after we entered here, there's nothing signaling from this candle. But this candle that formed now, it gives us a gravestone doji. And we were told in the previous lecture that if you have a gravestone doji at resistance, it is signaling a sell. Now, the next candle that formed now, we also have this pin bar, which is also signaling a sell. Then after that, we also formed an hanging man. So it is just telling us that this resistance zone is actually a very strong one. We have three candlestick patterns within the resistance zone that is indicating sell. So all we need to do then, probably after the formation of the first one or the second one or the third candlestick, is for us to now enter our sell. So I place my sell, then my stop loss above that zone, then I bring my TP below this low, or I can still target lower because the market is still running. So, or target the last low here because I believe we are bearish from that resistance. Now, let's assume we miss this now. Let's say we miss this. Now, extending this zone again, we extend it. If we look at today, this particular day now that I'm analyzing, this is the day from here now. Look at this formation here. I'm not seeing anything that will make me to sell. If we look at this, we can say this is an hanging man. Let's say I'm not too sure. Then I was waiting for something to form. Then here, I could see this particular hanging man here. So this is signaling another sell. And we can see that we had a very strong sell downward. So what will I do after the formation of the hanging man? This is the candle close. I enter my sell here, place my stop loss above, and then probably my TP below here. And we have the trade running in profit. So that is how we look at different candlestick. So let's move around. Let's go to higher time frame, move around and see the candlestick patterns that we can find, then that we can actually take trades from. So if we look at this, so this zone now that we have here, if we look at this zone, is a very strong zone of support because this zone broke this high. It created a new higher high, which is signaling to us that the zone is actually bullish. We had this and this. This was the last low that created this. So we can mark that all this area now is a zone of support and it is very strong. So we can now be waiting for reaction from within this zone. If you look at this, we can see a lot of pin bars. If you see this pin bar, we can take a buy. But what I'm actually looking at is now this bullish engulfing candlestick. We can see this big bullish engulf. We had the first candle, which is a bearish one. Then we had a bullish one that engulfed it. So we can actually see that after that bullish engulfing signal formation, all we need to do is after the close, we enter a buy, set our stop loss probably below the candlestick or the low. Then we target probably 1 to 2, 1 to 5, and then we are going to take our profit. So that is for an engulfing candlestick. So the inverse of it is just for the bearish engulfing. If you look at it from here, you can see that this candle actually engulfed the sell candle from this particular perspective. And what happened? We actually sold. We sold from here. So we expect a sell. So we can set our stop loss here, and the market sold off. So that's for a bearish engulfing. So these are the things that we can look around for. So that's not to say we don't have candlestick formation all around, but because you are now seeing let's say a long-legged doji here now, you are now saying that okay, I want to sell. No, you have to look at it. Is it at a zone of importance? So those zones of importance are zones of resistance and support. So we have candlestick formation all around, all on the chart. But what we are actually looking for are those that at key zones, important zones when we are trading. So at the same time, if we look at this now, if we look at this zone, a very strong zone of resistance. This is a very strong zone of resistance. So let's probably, this was where we were when we were analyzing. We were extending. Looking at this, we can easily see this formation. This is an hammer. This is an inverted hammer, or you call it a pin bar. After the formation, all I need to do is to sell. I sold from after the close. Then you can see that the market, so even after coming back into that zone, it still sold because it is within a very important zone, which is a zone of resistance. So these are the things we look out for when we are taking our trades. So we can also look at this support zone. Let's look at this support zone. You can mark this support zone. This is a very good zone of support. And if we look at what happened there, we've been having reactions. We extend back to this place. It's a very strong zone of support. So if you look at this candlestick formation that is within here, this formation. So this is an important candlestick. If we remember that we had another type that we compared to Doji, we said this candlestick look like the Doji. So it is the spinning top. If you look at this actually had a small body but had long wick above and long wick below. And after the formation on that important zone, we can see that we had a very bullish momentum upward. So that is how to trade using candlestick pattern. We look at those zones that we see as important. This zone is very important for me to take a trade from. You don't just see probably a spinning top in between here, then you now decide that okay, this is actually going to be a buy or this is going to be a sell. So we have to look at them as zones of support and zones of resistance, and it might be zones of trend line support or zones of trend line resistance. So using all this in confluence with other things like the chart pattern, the support and resistance zone, the trend line zones, these are what is going to give you an edge to be a profitable trader. So I believe after this lecture, we are going to look into our charts and try to identify some of these candlestick pattern. This is what will help us practicing them, looking at the chart. Okay, you mark a zone. This is a zone of support. This is a zone of resistance. What candlestick am I seeing here that is confirming to me that I can actually take a buy or take a sell from this zone? So these are the things that we should watch out for while analyzing the market. So this will move on to other aspects of our technical and fundamental analysis class. So I believe this is clear enough. If it is not, we can always come back to the video, watch it, digest it, understand it, and then we apply whatever it is that we have learned. See you in the next lecture. Thank you.